Okay. Hello and good afternoon, everyone. My name is Jason Alan Jankovsky, your host at netwinningtrader.com. And David was kind enough to give me about an hour's worth of time today to present to you in this particular group of presentations on psychology and discipline and making the most out of your approach every day. Um, I have something I think you're really going to like. I may take it in directions that might be unfamiliar, so I want to encourage everyone to remember that you can think of me as a friend in the business. Put a comment or question in the chat window anytime you like, and we'll make sure and address that during the broadcast. We're going to leave plenty of time at the end for questions and answers. I've got some materials that you can get at little or no cost, and we'll have all those available for you at the end of the broadcast too. And because we've got a few minutes here early, I'm going to get started right now and get right to the material. And it's, like I said, it's an open presentation. If you have a question or something that you would like to put for discussion, you can put that in anytime and we'll make sure and get to it. So, what are we going to talk about today? Well, I'm going to ask you to tap into the hidden edge. See, every trader has what they believe to be is their edge, the reason they can make money. But what if you aren't really earning what your edge says you should be earning? Well, in my opinion, that's because there are really two parts to the trading edge. Whatever the edge is that you've got, there's two parts to it, really. There's the overt, meaning the visible part, and the covert, meaning the hidden part of your edge. And that hidden part really is more significant. And we'll talk about that for today. Feel free anytime to put a comment or question in. One thing I want to do, though, is always remind you guys, because I never know who's listening, the trading in futures, options, off-exchange Forex, these are all risk investments uh, that may not be suitable for all investors or all traders at all points in time. You need to carefully consider whether trading is right for you in light of your personal tolerance for risk and your financial position. People do lose money. People can and do lose all their money, some cases more, rare cases. Uh, Everything we talk about in here is considered opinions, market data, methods, and all the rest. It's just points of view, subject to change at any time. And we're not providing any personal financial advice in here. It's really more for education than anything else. Now that the regulators are happy, let's go ahead and get to work. So, what is it we want to talk about today? So, what is our trading success formula? See, at Net Winning Trader, we do things what we feel is a better way. Um, because what's the bottom line here? We want to make more money with our trading. That's it, right? So, in my opinion, at least part of the reason why so many traders will fail at trading is likely due to overcomplicating a very simple process. See, trading success really boils down, it really comes down to only really two things. It's very simple. Number one, knowing what really works. You have to know what works and what doesn't. And that means you have to make some hard choices about where you're going to invest your time in what you're going to be learning and learning to know the difference between what's going to help you and what's not going to be of any value at all. Now, I'm not saying that's an easy thing to do. What I'm saying is, if you knew what really works, wouldn't you just do that? I'm sure every one of you would say yes. So, what is the missing part? So, if you know what really works, you'd be doing that. So, maybe you don't really know what works. So, that has to be clear and clarified to you. Secondly, whatever that is, you need to do that thing consistently. You have to remain 100% consistent. And this is work. There is no easy way, and you have to be willing to pay the price the markets ask you to pay. Now, the good news is there is some help to do that. That's the whole point of what we offer. And the important thing to remember in that process of deciding if you want more help is this. It oftentimes means that you personally do not know what you don't know. You don't know that you don't know something. It's self-deception or self-deceit about what's really important and what will really work for you. And what's the question? Why is this not working for me yet? And we all need to be honest with each other here right now. There are people listening that are not winning at this. You're not making money, and you want to be, but you're not. What is the real problem? What is not working for me yet? Right? Well, let's talk about that. Part of the reason why most people are not working or not making money, I should say, is that what they're investing their time and their effort in is trying to get an answer to this question here, knowing what really works. So here's what most traders focus on. They focus on the number one question. And here's the really interesting thing, right? This is what I've discovered by coaching hundreds of losing traders all over the globe every year. Most traders are focusing almost exclusively on this one section of the issue and completely ignoring everything else. Now, we know from the statistics that are kept about trading in these markets, right, that around 85 to 90% of traders are losing at any one time, right? Now, these losing traders think that they just need to fix their entry. Most losing traders think that the real issue here is how they're getting in. So they'll spend a fortune, sometimes an entire lifetime, seeking out the answer to their ultimate trading question, which is, where do I get in? See if they can find the perfect analysis, the perfect way to come up with a buy or sell, the perfect way for them to get an entry. They think they'll find lasting success once they discover that. And that will completely solve their trading problems and do it for good. If I can just figure out how to get in perfectly, right? I know that resonates with some of you. Some of you spend your whole lives every day, day after day, month after month, week after week, trying to get that better edge, that better solution to where to get in and where to get, where do I get positioned so that I'm buying the absolute low or selling the absolute high and doing it all the time. Well, is that really the answer? Really, is that the perfect entry? No, it's not. They don't know. That's not it. You can't get to the right answer until you start asking the right questions. See, is this really the answer? Where's the perfect entries? No, that falls under the you don't know what you don't know problem. And this is what's really interesting to me. And I've been trading for my whole life. Most traders are really completely unaware that they're trading in something called a zero-sum transaction market. And I'd like to ask a question out there. We've got a handful of people still here today. Um, have anybody that's listening right now, how many listeners out there haven't heard the term zero-sum transaction market, or maybe don't know the term, what it means? Anybody want to go on record and just say, yeah, I'm one of those guys. I don't necessarily have heard that question. I've never heard what a zero-sum transaction market is. Anybody want to do that? Or if you do know what a zero-sum transaction market is, maybe you could tell me what you think it is. I'd love your feedback in here. We've got how many people listening? Let's see. We got one guy. Zupro says, I have. Thanks to you, loser pays the winner. Okay, well, that's kind of a cheat because before that, you didn't know what it was, right? Okay, all right. For every winner, there is a loser, Dave John says. I'll give 50% credit on that one. Zuprel knows already, so that's good. So he's already operating from the new paradigm he needs. Um, See, most traders that do know what the term zero sum means. Anybody else want to drop in and say, no, I don't know what that means? It's okay if you don't. It's just information that we're trying to discern and dissimulate between each other. So if you don't know, it'd be good to know if there's at least one person. A lot of times when I do these broadcasts, there's usually 3 or 4 people that will just type in, no, I've never heard that before. Maybe I could ask this: how many times during your listening over the past several days of listening to stuff with David or other broadcasts, how many times have you heard the term zero sum transaction trading? Has that ever been mentioned to you by other analysts or advisors out there? That's another thing that's really common, is that most analysts and advisors and people who are trying to offer you real help at this never use the term zero sum transaction. So most people are just unaware of what it means and what the marketplace is really like. Uh, One guy says, here we go. Let's put it right here. Zuper says, Michael Beck says, no, he doesn't know. Berwick says, no, I have never heard of it before. Okay, good. Now, not today. One guy says no. Zero sum game is a more popular term. Sure. Yeah. Well, okay. Let me just clarify this. Take 2 seconds, help you understand. Trading in futures, options, and Forex. If you're trading in those markets with at least some of your equity, you're trading in zero sum markets. That means for every buy order that is entered into the market, it must be matched against the sell order in order for that trade to exist and actually become live. One person is long, one person is short. Now, most traders mistakenly use the phrase, that means there's a buyer for every seller. That's what they're thinking, because that's what happens. A buy order is matched with a sell order. When describing a zero sum market, they think that's all there is to it. But the correct answer really means there's a winning contract for every losing contract traded. In other words, if you are long the market, somebody must have sold it to you. If the order flow goes bid and there's more buy orders come into the market than sell orders, the market will rise in price. So you have a winning position on the buy side. The losing position from the sell side is where your profit is. So to win at this business, you have to take money from another trader's account. Winning traders know that they can't get paid a profit unless it comes out of the losing trader's account. So therefore, what the winner is doing is something else. What the winner is doing, he's thinking differently. That 10 to 15% of traders that are out there that win consistently, they're taking the loser's money because they think differently. When you think differently, you behave differently, and that behavior changes doing the opposite of what losing traders tend to do. That's usually the right thing to do. All a winning trader is really doing is asking the question, where is the loser? Which in reality, that's the only question you really need to answer. It's when we talk about you can't get the right answer until you ask the right question. The right question is, where is the loser? That's really the only right question you need to ask. You don't need to ask the question, what's the Fed going to do? Or which way is the market going to go? Or what's the report going to be? Or where is support or resistance? Or when is the market overbought or oversold? You don't need to ask any of that question. The only question you need to ask is, if I'm going to go long today, that must mean the seller is the wrong side of this market. What are the clues that I have that tell me the loser is now short? If I think that's true and I go long, I'll take the loser's money. That's what the winner is thinking about. He's not thinking about anything else. Pro level traders know that you just have to get an edge over the losing trader to take his money. See, the unfortunate part of focusing solely on the quote perfect entry method, what everybody does, they focus on the one thing that they think is going to make all the difference. The problem with that is it shows that the underlying failure in the trader's thinking. It tends to trap the trader into that thinking without most traders even knowing they're trapped inside that losing thinking. What is that? Looking for the perfect entry method or the better entry method or the one that's right for me, or however you want to phrase it. Looking for that perfect entry method means the trader is looking for a sense of certainty before he trades. This trader is trying to, quote, reduce the risk of trading, which is impossible. You can't reduce the risk of trading. I'd love to have that conversation with people who would like to understand what I mean by you can't reduce the risk of trading. I'll be happy to do that. We can talk about that in Q&A, but I'll just take it at face value right now. you can't reduce the risk of trading. There's only one risk in trading, and that's that you're going to be on the wrong side for a loss. You can't reduce that because you and I never can know what the market's going to do next. Nobody knows. Jesus Christ doesn't know what the market's going to do tomorrow. How are you going to figure it out? So number two, doing that thing consistently, that's what we want to do. So by focusing on the second part of what's needed in a winning trading approach, you free up your mind to function under a sense of probabilities, which is absolutely required because no one, not a living soul or a dead soul, can ever know with any degree of certainty which direction price is going to go after you enter your trade. You just don't know. You cannot control the markets by all the study and methodology that you use. And when I say control the market, that's what you're trying to do, but you call it something else. You call it reducing the risk, which can't be done. You see what I'm getting at? But you can learn to control yourself. By focusing on consistency, you can keep doing the right things that lead to success, even when they, quote, don't work, because they're not going to work all the time. No one gets it right all the time. What you're looking for is consistency to do the right thing all the time so that the probabilities drop to the bottom line for you. If you focus on the second part of the trading success formula, doing the right thing consistently, then you unlock your true trading potential. Everybody's edge, whatever the edge is that you think you have, that has a probability to it, a degree of winning trades that will happen, a degree of losing trades. You have to focus on what creates the probability for a winning trade and then do that consistently so that the edge can drop to the bottom line. That's all you really need in this business. Failing to balance your sense of consistency with your outside or overt edge likely means your thinking will suffer. Your thinking suffers, so does your performance. So how do you even know if you are consistent? A lot of people believe they're consistent, and they're really not. Now, I'm going to show you the only way to discover if you're consistent. And what you don't know about yourself and your trading method, this could be the thing that makes a huge difference to you. Most losing traders have no idea how consistent versus inconsistent they really are every day. You have to study what you're doing. So what is the key to finding out? It's very good, very simple. Good record keeping. But most people don't know what the records are they should keep. That's another part of the no, you don't know what you don't know problem that everybody faces. So get this working ASAP, right? This is what you have to do. You got to keep good records. Fine. What does that mean? Well, let's talk about it. It's something you can start working on today, as a matter of fact. It's the easiest advantage you can give yourself to start something you can do right now. And almost no one is keeping good records like this. So these traders may spend their whole trading career lost in a fog, just spiraling around with no hope to find a way out because they're not really recording the right information that will help them. So I'm going to show you a proper format for record keeping. Here's what you got to do. You have to write down what you do every time, what you are thinking every time. Now, if you want some help with this, this is a freebie I can give you. I'll give you the email address at the end of the broadcast. Just say, I want the PDF, or send me the record keeping details. I'm going to send you the same thing we use in the full coursework from netwinningtrader.com. All you got to do is email me, and I'll give you the address at the end of the broadcast, and we'll send you the same stuff. Now, why is this that critical? You know, what now after we do that? Well, I'm going to show you what you need to do with those records. We're going to review those records, right? That's simple. We review those records and we look for consistencies and inconsistencies that you already bring to the table. We're going to look for patterns of what you're thinking and doing. We're going to ask the question, what led you to change your mind and not follow your rules? Why did you know you did? You knew you were breaking your rules. When you broke the rules, you handed yourself a loss. Why did that happen? See, whatever we find that is good, right? We want to keep that and enforce it 100% of the time. Whatever we find that's working against you, We want to remove that from your trading day. And at netwinningtrader.com, we got scores of tools to help you do both. Now, if you want a better solution, you need to have a qualified coach or mentor do that review for you or with you, because a third pair of eyes is going to see something different. An experienced person can read between the lines. They can see a root cause of your thinking that sabotages your results. You know, I'm one of the few people that I know that can look at your brokerage house statement, your P&L, where you get the statement that says bought this, sold this, here's your net results, here's where you liquidated. I can look at all that, make a couple of quick notes, and I can tell you exactly what you're thinking. Therefore, I can show you what you need to change. I'm one of the few people that knows how to do that. And you know what? It's a skill that took years and years and years to develop, just like other really difficult skills are to develop. And I'll give you an example of what it's like. I don't know if we have anyone here listening who's a neuroscientist or maybe a brain surgeon, somebody who works at that level in neurology. But an experienced neurosurgeon can look at a CAT scan. He can look at 3 different CAT scans and he can say this: aha, that person is suffering from Alzheimer's, that person is a schizophrenic, and that third person is completely normal. You and I would look at all 3 CAT scans and not have a clue what are we looking at, right? What's the difference? Training, education, knowledge, commitment, and discipline, right? Wouldn't you like to have that access to your trading? This is what you're doing that works. This is what you're doing that doesn't work. I can tell by just looking at what you're doing. Wouldn't you like to have that ability in your own life all the time? That takes time and effort and discipline to develop for yourself, and you have to be willing to pay that price. Until that point, you might find that an experienced mentor or qualified coach is in your best interest. And the amazing thing is, sometimes it's just one thing to fix that unlocks your profitability. I've had this happen more than once, where I've had a guy pay me tens of thousands of dollars for personal one-on-one coaching for 9 weeks. And we're getting halfway through his stuff, and he realizes that the problem is one thing he's got to change. And we make that change, and he goes click from lose to win, and he starts doing better right away. And by the end of the coursework, he's making money consistently by fixing one little thing that he didn't even know was missing. But when he discovered it through objective thought and disciplined, guided coaching, he discovered he had every tool he needed at his disposal. It was there. Everything he needed to win was there. It's for you, have it too. But there's that one little thing that's missing, and you don't know what it is, and you can't find it. That's what a coach is for. Now, since we might be exploring some new ground with some people listening, I'm going to give you some symptoms of inconsistency. I thought it might be wise to take a moment and just show some of the more common behaviors that demonstrate that a trader is allowing some level of inconsistency to flourish inside their trading. Now, here's a couple. This is what inconsistency looks like as far as I'm concerned, right? Hesitation, right? You ever done that? Came time to do something, you froze. Waiting, especially waiting for confirmation. Nothing will make me see red faster than a trader going, well, I wait for confirmation before doing anything. This is an absolutely ridiculous thing if you have this in your trading world. I'm sorry, not going to sugarcoat it. Taking off your winners too early. Anybody out there done that? How about adding to losers? Big inconsistency clue. Going big on sure things. Every one of us has had that experience where we thought for sure we were at the right point and we loaded up and then we got our clock cleaned in 20 minutes, right? Jumping back in after a loss to, quote, get it back. What's that called? Revenge trading. You've had that problem. So if you have any of these issues have shown up at some point in your life, right? If you're guilty of any of these behaviors, it's very likely that whatever edge you have has been killed off at the moment you do one or two of these things. And that's the problem, is that you would have been fine, but this is what happened. Your inconsistency showed up. And I want to look a little bit deeper and let's talk about what really is the underlying causes of these inconsistencies. Where does your own level of inconsistency come from? This is what you got to focus on. You got to get consistent. If you're not doing that, there's a problem. Are there any clues that we can find that point to something that is hurting your method? We looked at what it is that you do. What's hurting it? Well, one thing is this: complexity. When your method has a too complex analysis process, then you're less likely to be clear about when there is a valid trading opportunity. You might be surprised to learn this, that some of the biggest money-making traders that have ever been through history are not charting the markets. Jesse Livermore never looked at a price chart. Hardly looked. I shouldn't say he didn't look at a price chart. He didn't look at it the same way other people do. He was looking to find the loser in the price chart, right? They don't follow the news. They don't analyze things looking for some sort of analysis method. They want to keep things as blindingly simple for themselves as they can, which is the answer to the question, where is the losing trader getting positioned on what side? I want to be on the other side, right? And I'm going to tell you a story that's in my second book, The Art of the Trade. Anybody out there read The Art of the Trade? Um, Hope you liked it if you did. If not, it's available anytime on Amazon. In there, I talk about things that astounded me in my process of going from a losing trader to a winning trader. And one of the things that I experienced, I'm telling you, this is a factual event that happened. I was learning how to trade by trading at a brokerage firm that had a, a customer only place. So I opened, a small account, like 3 or 4 grand, and I went into the private room that they had for the customers. You had to be a customer to be in there. So I'm in there with all the other guys in there that are losing money every day. And everybody in there is using charts and tools and dots and lines and ratios and Gann wheels and everything you can think of to figure out what the market's going to do to make money. And then in walks this guy, 2-day-old beard, shabby coat, worn tennis shoes. He looked like a street guy, like that kind of thing you'd see in Chicago. And he walks in and the room got real quiet. What the heck's going on? And so this regular that was in there with me comes over and he says, "Stay away from that guy. He's nuts." So I said, "What do you mean he's nuts?" He goes, "Just watch." So the guy sits down, takes a Coke bottle out of his pocket, takes out a notepad and a pencil, calls the back office and goes, "This is, account number, blah, 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 XXX, whatever. What's my account balance?" "Okay, thank you." And he hangs up and he sits there and then he starts tapping away on the screen. All right, what's he doing? I'm just watching him. And then the guy, that the regular there, I used to call him the Fly because he was always hovering around. The Fly says to me, "Now watch this." So I'm just watching. Suddenly the guy grabs the Coke bottle, puts it to his ear, just like you would a telephone, and says, "What? Hello? Oh my gosh." Slams the phone down, or the Coke bottle, and he yells to everybody out there. He goes, "They're saying you got to buy. Be quick about it." He grabs the phone, yells into the phone, "This is account number so and so. Buy me 100 May pork belly at," list the price, right? "Put my stop at this price." "Okay, got it. Got it." Writes down his fills, hangs up. Now, if anybody out there's ever traded pork bellies, I think you know what's about to happen next, right? You're thinking this guy's going to get caught in a limit down move in 30 seconds. No, exact opposite happens. I'm watching, all of a sudden the pork bellies take off. They lock limit up. He picks up the Coke bottle again. And he says, "What? Are you sure?" slams the Coke bottle down, yells, "It's time to get out," grabs the real phone, calls the back office. "Hi, this is account such and such and such and such. Sell my 100 made bellies at any price. Get out now." Slams the phone down, waits a few seconds, the thing rings, listens, okay, 30 at an eighth, okay, 40 at a quarter, okay, the remaining 30 at half, okay, got it. Click. That's it. Then he very calmly stands up, lets out a big sigh and rubs his eyes, picks up his Coke bottle and his notepads and his stuff, puts it all in his shabby pocket, and he walks over and he says, "It's been great trading with you guys today. Nice work, guys. Nice trading with you." And he walks out. And I'm like, what just happened in the last 30 minutes? So the fly comes over and he says, "You see that guy? He does the same thing every day." Well, when he comes in, sometimes he doesn't come in for a few days. But same thing. He looks like a street. I don't think he's a real trader. I think he guesses. I don't know what he's doing. So I go over to the screen, and there on the screen, the May pork belly chart. I saw where he got in, and I saw about where he got out. He captured about 90% of the day's full, whatever that market had to offer. He bought near the low and sold near the high. He got about 85, 90% of the daily range in pork bellies. Now, he had every tool that everybody in that room had, ignored all of that. He traded because somebody called him on the Coke bottle. And that's a real thing. That really happened to me. I saw that happen in real time, and it changed my life. What was it that guy was doing? It wasn't complex at all, was it? Magic Coke bottle told one to buy and sell. Discipline. Preparing for the trading day so that you're ready when a valid trade appears. What was this guy's discipline? Apparently he's in there regularly enough to trade pork bellies, and he does it the same way all the time. I'm not kidding. There's a method to that discipline. What was it that he was really doing? I'll tell you what I think that guy was really doing is that he knew what the loser looked like in the market, and he knew the belly market, and he knew how to trade it, and he knew when he needed to be there, and nothing else mattered. So when the opportunity presented itself, he was there, he did it. The Coke bottle and the yelling around that was all show to keep these people off his back and stay away from him because they're the losers, and I don't want these idiots confusing my method. I bet that's what was going on in that guy's head. Is it really like that? You betcha it's really like that. Let's look a little bit deeper. You want to know what the granddaddy of all trading problems is? The one that will cost you everything you have plus more, including your home, your family, your marriage, doesn't matter. It all goes away if this is present in your life when you trade. What's the big one? Fear. This is it. This is the thing that will kill you every time. Because the real problem is you don't call it fear. You call it something else. And that's why you can't see what you need to do to finally cross over to the win column, because what you call your fear makes perfect sense that it's in your life. You call it waiting for confirmation. You call it better trade analysis. You call it all kinds of things. You know what I mean? What's the root cause? Fear. And what do you have to do with it? Manage it. You can't control it. You're never going to get rid of it. Managing means you have it and you still do the right thing. You might be surprised to note that most great traders are completely terrified every time they start their trading day. And I'm telling you, I know I am. It's the same feeling that a fighter pilot gets when the scramble alarm goes off, you know? Oh my God, I got to get out there and fight. I could die. I have no idea what's out there. All I know is that it's a threat, right? But we don't have to trade from the fear. We only need to manage it. And the most effective way to manage it is to continually focus on the net probabilities of managing your behavior. All you need to do is realize that you can win when you think in terms of probability instead of looking for certainty. Look, nobody wins all the time. You have to accept that losing is part of winning. Most traders, even the best ones, guys making seven figures a month, they never get beyond about a 50 to 50 win-loss ratio. Half the trades they do are going to lose. That doesn't matter. And the reason it doesn't matter is do the math. If you did 100 trades and you did them perfectly the same way every single time, not compromising, not letting your fear in there, not hesitating, not doing other things that you know cause losses. If you did 100 trades from your edge, the edge that you think you have, the overt edge, and you did it the same way each and every time, 100 trades, you're going to have 50 losers. So if you were consistent to keep your losses to only 1% of your equity, over 100 trades, you would have lost 1% 50 times. That's half your money. But the other half of that money would have been enough money to keep you in the game anyway for the other 50 trades, because you know you're not going to get 50 losers in a row. You're going to have winner, loser, winner, loser, winner, loser, winner, 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 loser, loser, loser. But at the end of 50 trades, half of them were 1% losers. Well, if the other 50 trades won 2% each, then you would have made 2% on your equity 50 times. That's a 100% gain. So over 100 trades, your win ratio of 100% subtracts out your loss ratio of 50%, giving you a net 50% gain. Can't you do 100 trades every quarter? Probably. So why aren't you making somewhere close to 50% a quarter on your equity all the time? That's what the probabilities say you should be making if you have a 50-50 win-loss ratio and take $2 out for every dollar you give back. That's the facts of the numbers and the probabilities. So if you knew that going in, that that's your numbers, you're going to make 50% this quarter, you wouldn't care which trade you put on when and where, as long as you followed the system, because the system has definable probabilities. You studied your record keeping to find that out. Now all you have to do is enforce it, correct? You must accept that consistency is the part you can control. And that's what gives you the better edge. That's what does it. See, when you know your probabilities and what your system can exploit best, you only trade from those probabilities. See, you can reduce or eliminate a very large percent of fear when you only trade from high probabilities. Like, think of it this way. For example, many people don't know that they're trying to develop an edge that is only going to work a certain percentage of time in the markets. So let's talk about that. Let's suppose that your edge was a trend following edge. Well, a market can only do three things. It can either trend up, trend down, or move sideways, trend sideways. Trending up and trending down would be the best arrangement for a trend following system, right? But the markets trend up about 33% of the time. They trend down about 33% of the time, and they move sideways about 33% of the time. So 2/3 of the time, your system is either going to be long or short, and you want to work that. The other third of the time, it's going to get chopped to pieces if you keep using it. So you have to have a method of identifying range play and turn off your trend following system until the range is over. You see what I'm saying? That would be the best use of your probabilities. But if you're operating out of fear and you have this expectation that every day is going to be a winning day, you're not identifying your trends to begin with because you're not consistent. You see where you're never going to get to the point where you can trust the probabilities inherent in a trend following system and accept the fact that it's not going to be perfect anyway. So before we close out and open the floor for Q&A, I want to tell you a little bit about myself because I think this is really important. Because a lot of people listening have never heard me talk before. I've been trading for almost 40 years. I started as a customer in 1986. I've been trading for longer than many of my own customers have been alive. This is my full-time thing. I'm a real guy, Sarasota, Bradenton, Florida right now, retired from the markets in Chicago, and this is what I do: coach and educate, and I trade my own accounts every day, just like you. I've made and lost seven figures, more than I care to admit. I'm self-taught, self-educated. I did the exact same thing you're doing right now. Bought tons of books, attended seminars, went to the stuff you can get for free on the internet. I paid tens of thousands of dollars for. I stopped counting when I got to about 60 grand. I probably spent 100 grand on books, charts, tapes, audio series, weekend retreats, private lessons, any and everything that you money show attendance, anything and everything you can think of in order to reduce my risk, which can't be done, and improve my trading, which can only be done by understanding probabilities. Just like you did the exact same thing you did. Everything you can think of that you're doing, I did it, and I found out there's a better way. To help you with that, I'm a published author. I got 4 market-related titles. I developed several manual and automated trading systems, all of which are not for public consumption. And I mentored hundreds of full-time traders from around the globe. So what am I saying? What I'm saying is what I have to offer is heavily vetted. I know what works, and I also know what doesn't work, and I can show you the difference. I know how to get results. That's why I want you to consider something, right? If your answer is yes, I want to make some changes to my own behavior, I want you to consider me your friend in the business. I provide you a complete program designed to assist you in making this transformation from losing to winning trader. You do need some changes to be made if you want to do it. You could try to make them on your own, but the probability of success is much lower. If you're ready to open the door to a fresh perspective, and I'm going to show you what you need to learn, it's going to challenge you. This program we have at Net Winning Trader is going to show you, is going to really challenge you to put aside your current method of trader participation. Now, that doesn't mean you have to stop doing some of the things you like doing or knowing that you work for you. It's understanding where that ends and where your consistency begins that you need to learn. Here's my address, netwinningtrader.com. You can sign up for the program there. If you want what we give you for record keeping, I'm going to give that to you for free. If you really want that, you want it now, email me info@netwinningtrader.com and say you want the package on record keeping so you can get a few for that benefit. Also, I'm going to have David put this in for you right now. This link at amazon.com. This book, The Psychology of Trading, How to Create and Maintain Your Winning Edge. This is my latest book. Here's where you can read a sample. And you can also Google up all the other books I've done if you're interested in getting a complete set. They're all listed there, and you can search by author. You can search by trader. This is on Kindle. If you don't have Kindle or don't like Kindle, you want the iBook format, you can go to the Apple iBook store, search the same title, and you can download it there. So let's go ahead and minimize that for you, and let's get back to Q&A. We have a few minutes left because we had a chance to start early. I would very much like to answer some questions for you guys. So I'm going to scroll through the notes right now and find out what I missed. Let's see. Guys haven't heard of ZeroSum. Okay, we covered that. What's down here? Zuprel says trapped into that thinking or non-thinking, which means using an indicator to think for them. Yeah, it's another problem with indicators and oscillators is that most people don't stop to think what's really happening with that. They just trust it. They think it's going to tell them what to do, which is the real problem. Wall Street Nurse says, please me PDF. Okay. All you do, send an email to info@netwinningtrader.com and we'll get that to you. CD Mail 9's got a great question. Is this person still here? Zuprel, everybody, Coke bottle guy. Yeah. Did you read that story? That's a real story. That's a real thing. It really happened to me. I swear to God. And I'm telling you, what that taught me changed my life. What it is that this guy knew something about the markets the rest of the world didn't, and he made 25 grand, 30 grand in one day. Isn't that what we're all trying to do? What was it that that guy knew that I didn't know? Why am I in that room beating my head up every day? Listen to these other idiots beat their head up every day. And this guy can walk in, act like a crazy person, and walk out with 25 grand. He must have known something different. What was it? So that became a cathartic experience for me. That was a big deal. And it should be for you too. Um, uh, let's see. Said yes. Okay. CD Mail 9 is still here. Okay. You asked the question. Many people who are educators insist on using waiting for confirmation, right? That's what you asked. So why do they do it, or why do you suggest that's not a good idea, is what you're asking. Is that, I want to make sure I'm clear on your question. Is that what you're asking? You want to know why I think that's a bad idea? Exactly. Okay. I want you to really pay attention to me. I'm not trying to hurt anybody's feelings, but I want you to really pay attention to me. You cannot, it is physically impossible for you to make a profit from your trading unless you find the losing trader, get positioned against that person, and wait for them to quit. That's what we teach in netwinningtrader.com, is getting properly positioned and waiting for the loser liquidation move. You cannot profit unless you are in the market waiting for the loser to quit. So if you don't know the conditions that the loser is going to quit under, you're going to be the loser. So waiting for confirmation in a position is oftentimes a measure of how much fear the trader has before they will enter a position and become at risk. So I want you to compare that with someone who's willing to take a risk when he knows the loser is going to kill himself. So he will get in right now. Contrast that with somebody who says, I don't even know I'm a loser and I need the confidence to get started doing this. I don't even know where that's going to be until I feel okay about it. Contrast those two methods of thinking, and who do you think is probably going to win? Now, when I say waiting for confirmation is a measure of fear, think this through. If your systemized approach, doesn't matter what it is, if your systemized approach says it's time to buy the market, if it says that and you don't buy the market, why? When is the best time to be a buyer in the market? When it prints the lows. Isn't your systemized approach supposed to be able to tell you this is pretty close to the lows, so it says buy? And most people say, well, we don't know that yet. Exactly. Which means what? You're looking for a sense of certainty before you do anything, as opposed to saying, I'm going to participate with known probabilities. If my system can call a low print 50% of the time, then I'm going to buy it. Half the time, I'm going to lose 1% on my money. The other half of the time, I'm going to make 2, 3, or 4% on my money. Therefore, losing 1% 50 times and making 2% or 3% 50 times is a net money making approach. I don't need to wait for confirmation. But why am I waiting for confirmation? Because the market has to prove to me that it's in a position to make money from the long side in this position, let's say in this case. So the perfect time to buy goes into the past. And now the market starts climbing up, which means you're giving away profit opportunity. You're losing, you're not in from the low. You're trying to get in somewhere higher. So you've given up some profit because you're just scared to sit there. You're scared to do anything. You're afraid to do something because it's not proven to you yet. It's not certain to you yet. Now, what has to happen for the market to prove to you that it's going to move? So let's say the first bar after the low print is higher. Oh, that's a good sign. Rather than buy right there, you wait for the next bar because your system says wait 4 bars before buying. That's confirmation. Okay. So on the second bar, the market takes off to the upside and it moves 35 or 40 points. Now, what are you doing? Now you're like, oh my God, I should have bought it, but I didn't. Now I don't know what to do. It says buy on the fourth bar, but what if the fourth bar is 50 bars higher? I could have made 90 points. I better get in so I don't miss the next 40 points coming. So you wait for the close of the bar because that's what the rule says. Wait till the close of the bar before doing anything. So you wait for the close of the bar. The third bar sells off back to the entry. You're now holding a big loss or stopped out because you couldn't afford to take a bigger risk. So you put your stop inside the range. So you get stopped off with a loss while the market never traded to a fresh low, which meant if you would have bought when the system said buy, you'd be in position with an open trade gain. Now, 8 bars later or into the close, the market's 70 points higher off the low. You would have had a really nice day, but you had a loss. And since you had a loss, you're now scared to get back in as the market makes yet another high and sells off again to another buy point. You won't add to it because you have a loss. You can't afford to take another loss. So you see how waiting for confirmation sets the emotional and mental stage for losses because you're thinking just like the losing trader thinks. The losing trader has gone through all those machinations in his head already. That's why the market made the low to get positioned. So now it makes the low. I buy because my system says buy when this happens. So I buy. I don't wait for confirmation. All this other crap's going on in all these other people's head. They're waiting for all, and their fear of loss, their fear of missing out, all of that keeps compounding and compiling until the whole group of them decides to quit and bail at once. That's why you get a big move in one direction in the last hour of trading. That's the loser liquidation because they're all day traders. And they all got to get out by the end of the day. Otherwise, they wouldn't be a day trader. So they're all going to quit by the end of the day. So all those sellers that sold it into the hole as the market starts to tick up, they're not getting a profit, so they eventually buy it back at a loss. Your system said buy that sell off because it's over. You wouldn't do it because you needed confirmation. Whereas I knew the seller was going to run out of steam somewhere around here. I'm going to put my limit order in and buy on a sell off. So I bought the last seller getting in. I bought against the losing seller. He quit by the end of the day, driving the price higher against himself. That's how this game is played. So if you play, I'm going to wait for confirmation game, you're just becoming the loser again and again and again and again. And you know that is true because that's you've already seen it happen in your account more than once, haven't you? If you're honest. CD Mail says, wow, that is right on point. You understand now why we do what we do? So you need to come to Net Winning Trader, consider if whether or not we have what you want, because I think we do, and let's get started. I'm on your side. I want to see you win. I really do. Okay. FX Francois wants to know, can you explain we cannot control risk versus managing risk? Absolutely. That's a great question. Um, you cannot reduce the risk. Let's talk about risk. What's the risk in trading? What's really the risk? Does anybody want to hazard a guess on that answer? What's really the risk? The risk is if we buy the market, we might be wrong and the market goes against us. If we sell the market might be wrong, or we might be wrong and the market goes against us. In other words, the element within the market that drives the price, which is the orders being placed, we don't know what that's really going to be. No one knows. Like I said before, Jesus Christ doesn't know what it's going to be. So since we don't know what the orders are coming into the market until they get there, Nobody has any microscope. There's no tool. There's no analysis. There's no phone call to somebody who works in the back office. There's no way. It's not physically possible for any one person to get a count on the order flow from the buy side or the sell side until it actually happens. Until it actually happens, it's just a guess. So if it's just a guess, can you guess wrong? Yes, you can guess wrong. So how are you going to reduce that risk? All the computations on overbought, oversold indicators cannot tell you what the order flow is going to be. So you can't use stochastics and percent R and ADX and all that bullshit. You can't use any of that stuff to reduce the risk. So why would you try? There's no analysis that you can do that will reduce the risk because the risk is the same every day, day in and day out, every second of every day. The risk is I could be wrong about my assessment of where the order flow will change. Since I don't know where that's going to be anything more than a reasonable, educated guesstimate, I could be wrong. I can't reduce that risk because there's no study available for that. There's no way to count order flow before it happens. That's why when you watch the news, the rain is always a percentage. 20% chance of rain today. 40% chance of rain. 50% chance of rain. Why is it? Because certain things are known by meteorologists, other things don't. They don't know. They can't control that. You know what I mean? So you can't reduce the risk. All you can do is pre-select the risks that you're willing to take and do the same game every day, all the time anyway. In other words, I teach our students to take 0.5 to 1% risk, maybe 1.5% risk on your equity on any one trade. And then we do 100 trades using our method, and then we count the winning trades and the losing trades. We've never risked more than 0.5 to 1% on any loser, and we've always tried to hold our winners for 2% or more gain. So how did that look for the first 100 trades? Where did you break the rules? Where did you mess up? Where did you get scared? Those are all the training level things that we have to do. But the method is really simple. You can manage the risk by pre-selecting what the risk is going to be on your account and never changing that. But can you reduce the risk through study and education and training on the risk? No, you can't reduce it. Does that make sense? Supra wants to know, is consistency a matter of just willpower, like a diet? No. Think of it as a matter of discipline. Discipline, you know what discipline means? It means pre-selected action. It just means if A happens, I'm going to do B. If C happens, I'm going to do D. And then discipline is when A shows up, you do B. Doesn't matter how you feel or what you think or what it looks like or what the news says or what's coming out in 10 minutes. That's all BS. If A shows up, I do B. That's discipline. That's consistency. Zuprel wants to know loser liquidation move. What does that look like? Well, I discussed that in the psychology of trading. I discussed that in time compression trading and a little bit in trading rules at work. Loser liquidation move, what does that look like? Is sort of like asking a doctor, hey, how do you make a sick person well? What is it that you look for to see if a guy's sick? See what I'm saying? It's a more complicated question to answer. I'm not saying that you're not asking a good question. I'm not saying that it's a bad question to ask or that I can't answer it. What I'm saying is it kind of depends on where you're starting the process from. Where are you looking for losers? What is a loser liquidation move going to look like if A happens or B happens? You see what I'm saying? I could probably put a chart up, but I don't know if that would. Do we have time for that? No, we don't. I don't know. David, let me know. Do we have time for that? Um, CD
Uh,
mails.
sure.
Bang.
Yeah. Yeah.
Do
If you
we?
want.
Okay. So
Yeah. Like I
wow.
said, you're You're the last presenter of the day, so you can
Okay.
take a few minutes extra if you want.
Okay. You answered liquidation question and the confirmation question. Thanks. Okay. All right. Well, Dave John says about probability thinking. Please elaborate on how you do that in practical terms. Okay. That might be a great place for us to put up a chart. Let me see if I can get my charts up here. Well, sometimes right about now they're in the process of updating, so I may not be able to. Ooh, yeah. Okay. Uh, they might be done. Let me see if they're done. I'm going to go to page here that will. All right, let's see. Okay, here's Japanese yen on the 60-minute. Here's 60-minute time frame over the last 3.5 weeks. And DJ wants to know, let's talk about probability thinking. Okay, in practical terms. All right. This was the weekly high, 414, 421, right? Roughly. That was roughly the weekly high. So the weekly high, roughly, for the second week in April, this was the weekly high. And if we look back a little bit further, what do we know? Well, we're basically under uptrend, right? So what do we know about uptrend? Well, we know uptrend will pause at some point and go sideways as range. And then it will either become downtrend. In other words, that's going to be the top of the market and the market will move south, or uptrend will resume as the order flow remains on that side, remains bid. You follow me? Right? Okay. So this price point here, 144.80, 154.80, right? This price point here, where is this relative to other times the market has made a high print and fallen off? Well, let's look at the daily time frame. So here's our price point here. Oh, we haven't been at this price point since going back to October 22. That can't be right. Let's go to the weekly time frame. Wow, we're at a high print here that this market hasn't been at going back years. Let's look at the monthly. Wow, we're at 154.80 is the highest price this market's been at since 1990. Factoring in inflation, the price of the dollar versus yen would be way up here, 210. Well, what does that mean? What's the probability of somebody looking at the exact same data I just showed you and saying, yeah, this market's on its way higher? If that probability you believe is lower, then at some point the buyer in the market has to do something. He's got to leave the market. He's got to sell. He's got to take and put a sell order out there, causing a liquidation position for him. So enough long participants, because the only buddy making money in this market are the longs. If the longs are making money and they at some point say, that's about it, that's enough, I don't think it's going to go any higher, and they decide to sell, there's going to be a drop in open interest. Why is that? Well, because the long that was in the market is getting out. So there's less contracts in the market. So couldn't you look at the Japanese yen futures contract as the market reached 154.80 and look for a drop in open interest? Couldn't you do that? What you would have saw, though, would have been a small rise in open interest. So that showed there was a little bit more coming. And that was it. Now we're up at price points the market hasn't been at in 38 years. This is the seller. So see this big wick here? That wick, that says the seller took control of the market there. How do we know that? Massive liquidating move by the buyers. That's what this big bar is here. Single biggest down bar this market has had in years in 1 hour. That can only mean longs were liquidating, getting out. From this high print to the end of the week, this week here, after the market made one last push to the upside and then sold off, this week right here showed a big drop in open interest in futures. What does that tell you? Does that make sense? So this move to the upside here, all this is selling opportunity. I'm waiting for my system to give me another sell signal. Until then, I don't do anything. My system didn't give me a sell signal yet. Well, it gave me one signal overnight in here, which I lost 30 points on. Well, 40 points, I think. So I had a sell signal at what was the weekly high that then became new weekly high. So now we're seeing the sellers come in. We're waiting for the next round of trading to see if maybe there's an opportunity there on the sell side. Does that make sense? Is that making sense? What I'm saying? What's the probability thinking? Does that help you understand what I mean? Is that working for you? Dave John. Thanks, Jason. Very good. Okay, good. All right, excellent. Price is not order flow, so you can't see it. It's implicit by the change in price, correct? FX Francis says thanks. Shell07 says excellent presentation. Thanks. Would NASDAQ book view or book map assist following the icebergs? I don't know what you mean. I don't trade NASDAQ futures, so I don't know what you're referring to there. You can enlighten me a little bit, that help. Any other last minute comments or questions, guys? It's good stuff. You guys are asking all the right questions, it seems like today. Zuprel says you can't see market orders as order flow. That is the guy's thinking. Right. What does a market order mean? Market order says, I got to do something right now because what do you got to do? I got to get out to protect myself. I'm afraid of losing. Okay, so if that's happening and on one side, you know that's going to end at some point, you want to go the other way. If order flow is, wow, I can't believe that just happened, get me in, right? That happens a lot on news. On news, you get, that's a precipitating, we call that a precipitating event in Net Winning Trader. Precipitating event is something that causes people to go, wow, get me in, or wow, get me out. Either one is an expression of their fear of loss. The oh my God, get me in guy is afraid of losing the opportunity. The oh my God, get me out guy is the guy who's in the market and is afraid of losing money. So immediate market orders coming into the market during a news event are basically going to run their course within 15 to 20 minutes. After that, the real order flow comes on. And that's why you can see the market make this big bounce higher, big bounce lower, settle about where it started, and then grind one way or the other into new highs or new lows by the end of the day. That's what was happening there. So if you know that, you can get positioned against those extremes in pricing. So the order flow is a result of the thinking, but the thinking is the important issue. What are they thinking? There's every news event, there's always a group of people. Oh my God, get me in. Oh my God, get me out. All right, that's fear. Fear runs its course. They're going to be a loser. At what point is that over? What side won? You follow me? And Newsmith says FOMO gets me at times. Fear of missing out. Yeah, absolutely. Fear of missing out. What does that cause you to do? Fear of missing out. What if you could stop that behavior? What would your trading results be like? FX says, you said discipline is predetermined action. How do we get better at this? Mark Douglas said we have to think about what we are thinking. Thoughts behind the thoughts. That's a good point. Yeah. Mark said something to me that took a long time to understand. I used to mentor with Mark when he and I were both trading out of Chicago. I went and found him. and asked him if he would coach me. And so we spent a couple of years working together. And Mark is, without a doubt, one of the masters in the industry well, he's passed away now, but he was a master in the industry when it comes to understanding the thought process behind action and why people do what they do. And he told me something one time. I said, "How do I learn to see the tops or the bottoms?" I was asking him. It's an honest question. At the time, my thinking was very unevolved. And he said something that stuck with me to this day. Makes perfect sense to me now, but then I couldn't get it. It took a while. He said, "The wanting to is the how. The wanting to learn is the how to learn." You see what I'm saying? Super said, Mark Douglas is in here? No, he's not. He's passed away. Someone quoted him. I didn't see that. Because if he was in here right now, then something else would be going on. We have to think about what we were thinking. Thoughts behind the thoughts. That is correct. Um,
Um, Paula was on yesterday, and she
yes, that's right. Yeah.
she mentioned she mentioned you and how you would work with them for years.
Yeah. And I'm hoping that she's open to work a little more closely together because, you know, what he was doing all the way up until he passed is really significant. And I think a lot of people miss the real opportunity that coaching and mentoring can provide because there's a part in this business, there's a part of this business that says, that the whole concept of rugged individualism is still alive. This one guy took on the markets and beat the markets and won and made all this money. And it's a wonderful thing to be able to say. But if you look at the real world, people who achieve a certain level of consistency and growth and prosperity, it's never done alone. When was the last time there was a Super Bowl winning team that didn't have a coach? I mean, it's not realistic to think that you're going to be able to trade in the markets effectively with the equity you have because the number of mistakes, the critical mistakes, the equity, crushing mistakes that we make, you're going to make those more than once and you're going to run out of equity more than once. And if you don't have a third pair of eyes on what you're doing, you can't see where you're creating the same environment for yourself every single time. You think you're just getting bad luck. You think that you just can't figure the market out. But in fact, what you're doing is you're creating the same environment that is set up for a loss, and you just don't know you're doing it. Whereas a third pair of eyes, a coach would say, well, here's what you're doing, and here's why you're doing it. Here's what I see is happening here. You got to make a commitment to changing this. And that process, I don't think can happen unless someone is really willing to say, I want that help or I need that help. Most people don't really understand. And Mark was that kind of guy. He would just say, look, if you want my personal point of view, show me this material. And he would ask for certain material and he would say, this is this, and this. And if you didn't say, oh, okay, where do I sign? No, he didn't, that was it. You know what I'm saying? He understood that there's certain things that are true in the trading environment that um, are just there. One of those things is that you can't convince a skeptic. There's no point to that. And I can't tell you how much hate mail I get from people that, you talk to them years later, they're not trading anymore. You can't figure out why they lost all their money. You close mind, and that's the thing that Paula and Mark brought to the table is that they didn't have a closed mind. They would work with anybody who asked the right questions, but at some point they would say, this guy just doesn't. He's not going to get it. We're not going to waste our time on that. And I'm proud to say that I'm one of those guys that he felt confident in I would get what I needed to learn, and I did. So um, that was a big compliment. I didn't know that at the time he was coaching me that that's what he worked like. So for him to stick with me through what I had to learn was a big, big confidence booster for me. Z's got a question here. Look at what ultimately happened to Jesse Livermore. Well, yeah, suicide is the most sincere form of self-criticism. Michelle said she was good. Zupril says, I need a truthful mirror. People are full of delusion. That's true. The price of ignorance is infinite. Well, yeah, that's true. I'll also tell you one thing I have learned is that the price of knowledge is the destruction of illusion, which means if you really want to learn what you have to learn, you're going to have to give up your ego. And most people are never going to do that. That's, I think, why 80, 85% or more of traders lose is because in the final analysis, they don't want to be confronted that the problem is them. They're the problem. They don't want to hear that. And because they don't want to hear that, their mind is closed to the knowledge that might make the difference. And a lot of people view self-knowledge as being painful, or self-knowledge as something to be avoided, or, you know, if I have to kill my ego, then a piece of me is dying. I don't want that to happen. That's not true. The things that slow you down from becoming the best trader you could be, you want to get rid of. And that's a good thing. That doesn't mean that your whole life has to go sideways. It just means that the part of your life that interferes with your trading has to go. Sometimes that's more painful at first, but in the end, think about it. When have you ever made a decision that, to get rid of some bad influence in your life that 6 months later you didn't go, wow, I'm so glad I did that? You know, think about all the relationships you went through that were just not working for you. You wanted them to work, but they weren't. The other person was obstinate, wasn't going to change, wasn't going to move. So you cut bait and said, that's it, we're done. And you just never returned those phone calls and never went out to pizza again, never had beers again. And 6 months later, you're like, wow, I never realized what a bad influence that person was on me. Now they're gone. I feel a lot better. That's kind of how the process of coaching is that coaches will confront you with things that you need to change. And this is what's got to go. And most people eventually will say that's a good thing, you know, but there are people that like I said, there's a good portion of people just don't want to hear that. And so they dig in against that and they're not going to change. They're going to do it their way. And, you know, I actually lost a good friend over this. Uh, both of us were in our late 30s, early 40s before we moved down here. And he was like, oh, I can't believe it. I got screwed again. What do you mean? He starts talking about his wife. And I'm like, what happened? They're going through a divorce. Now, bear in mind, this is the fourth divorce this guy has been through, and he's in his early 40s. I mean, let's say that he married his first person after he graduated college. So maybe he was 22 or 23. So in a 20-year period of time, he's gone through four separate partners. Every 4 or 5 years, he calls it quits on his wife. Something happens, whatever. So I said, your fourth marriage? You've been married, you're going to be divorced again? He goes, yeah. Well, after I said to him, I just innocently said, well, after four marriages, don't you think maybe the problem might be you? You would have thought, that I was the devil. He flipped out. I can't believe you're taking her side, and stormed out. See, he wanted someone to talk to that would empathize with him. Oh yeah, I'm sorry. Oh yeah, you're right. Can't believe it. You got to give away half your stuff again. Oh wow, that's too bad. I really feel for you. Here, let me pick up the tab. As opposed to somebody saying, well, wait a minute. If you want to end this pain and suffering, why don't you own up and take ownership of the side you're creating? Well, maybe if you did that, you wouldn't have to go through a divorce. He didn't want to hear that. See what I'm saying? Where's that guy now? That was what, 20 years ago. He's probably on his sixth marriage or eighth marriage by now. Eating what he's eating He's eating yesterday's wedding cake with Liz Taylor. That's what he's doing. All right. Anyway, where are we? The point I was getting at before I get too far off track. Sorry, that I make a long story longer. Point I was getting at is that the purpose of coaching is not to give you a hard time about what you're doing. It's to encourage you to make the changes you need to make by showing you conclusive evidence that you create the problem. You're going to create the problems that you have to overcome. It's okay to do that. You need help to overcome it. Once you've got that, you're in great shape. Google, cognitive dissonance. The guy who got divorced can't allow himself to recognize the issue. Right. What's the right approach to the algorithmic trading that's all over the markets, considering that machines don't suffer from fear of any psychological issues? That is a great question. How much time we got? Oh my God. Oh, you guys, you're not going to stay here through all this, are you? James Dingle says sometimes you need to wait for confirmation. No, I don't know what he's talking about there. Um, let's see. Probably the same thing. Couldn't see the forest for the trees, right? She's Google kind of this one new message. Machines are programmed by. Oh, okay. This is James says. Sorry, that was a joke about the guy marrying too early. Oh, okay. Waiting for confirmation. Good point. Machines are programmed by math people, and markets don't move based on math. Okay, I just would like to offer one insight on this whole issue of artificial intelligence and algorithmic trading and fast. What do they call it? Fast trading, high speed trading, high frequency. Okay, all of those things, take them one at a time. High frequency trading is simply an attempt to try to squeeze the edge and force the spread to pay you. That's no different than a pit trader used to do. It's just happening a lot faster. To eliminate that problem, just force algorithm those kind of traders. They can't trade in increments that you can't use at the cash register. So they can't trade at sixteenths of a penny anymore. They have to trade at 1 penny or nickels, right? That would solve that problem because the only reason what they're doing is they're doing what forex traders do on a much larger scale, which is add a decimal to the equation. And we can do that because you're talking about exchange rates on $100 million. You could fine tune that exchange rate 9 or 10 decimals out, so you could buy or sell it for $1 difference. I mean, if you want to make $1 100 times an hour, I mean, maybe that would make sense. But the process itself is becoming counterproductive. So I think that'll go away. That's the first thing. The second thing is artificial intelligence and algorithmic trading and all the rest. Ask yourself who created the system, who created the algorithms, who created all of those things. So when you say math people, fine. What kind of math people? I have a book on my shelves right now. I would encourage every one of you to read. In addition to all my books, I would encourage you to read a book called The Predictors by a guy named Thomas Basso. And The Predictors is a story about how I think it was Goldman Sachs hired 5 PhDs in astrophysics from MIT laboratories in Massachusetts Institute of Technology, and gave them $10 million and asked them to write an S&P trading program, which they did, and it lost money. And how could the best minds lose money? And they went back and fixed the problem. And then that didn't make money. They went on and on and on until they finally feel at the time the book was finished, they had the edge they needed and they were going to go on to make bigger and bigger money. And nobody in that whole process was reading between the lines that basically said, why are people who aren't traders expected to become traders? I think that's a very good question. Now, I had an opportunity to spend time with a hedge fund manager who managed several $100 million, a position that I would love to be in, every bit as qualified as any of those people, but will never do because they won't let you trade. you're not allowed to trade. You can't trade. The goal is to keep the money around so that you can earn the fees. None of those hedge funds, most of them, the professionally managed funds, very few of them ever do better than what would be considered the industry averages, like the S&Ps and Dow Jones and all the rest. Some of them do considerably better for a period of time, uh, until you find out that those are guys that have found the money on their own. They're not investors yet. And once they start taking professional money from places like Bank of America and Merrill Lynch and all the rest, it comes with all the rules. And the rules say you better know what you're doing, because if you don't, you pay the losses. And they don't trade anymore. Um, Bill Ackman's a perfect example of that. The guy hasn't made money in years. His net rate of return is no better than the S&P 500 over the last 20 years. He's averaged less than 10% a year growth. Why is this guy managing billions of dollars, considered a guru and expert? Why? What's he really doing? Nothing. He's collecting fees. So I think that whole thing, AI and all the rest of that, it's set up to generate fees. It's not set up to make money. That's what I'm trying to tell you. In addition, this hedge fund guy that I talked to, managing all this money, he was very proud to tell me, oh, couldn't tell me how proud he was, that his artificial intelligence based neural net machine language learning system was at a 7-year-old level. It was thinking like a 7-year-old. Very proud to tell me that, because that's state of the art. And I said, well, let me ask you a question. Let's suppose I gave my 7-year-old nephew 250 million bucks and see how he does in the markets with it. What do you think of that idea? And he said, you just don't understand what we're doing. Okay. I don't understand what you're doing. What are you doing? You're trying to sell people to invest hundreds of millions of dollars with you because you've got a state-of-the-art product. But nobody's asking the question, state-of-the-art of what? You know what I mean? Who cares that it can think at a 7-year-old level? What 7-year-old can manage money, you pinhead? So I just really don't think any of those things are going to be a threat. I think you'll find that what they do is they set up and create a more structured environment to hit the loser. The artificial intelligence system that's being developed now, the things that are being developed now, will never be able to grasp the fact that it's creating its own losses. It will never come to that understanding. It'll try to fix that, because it's being programmed that there's a relationship between math and reality that it has to accept. It can't accept the fact that its choices are the cause of the problem, because that would mean it's sentient and it's making a mistake. You see what I'm saying? I don't think that's going to happen. It's going to end up like, what was the name of that Star Trek episode? You guys remember the Star Trek episode where Dr. Daystrom figured he could run a starship on the M5 computer, but it was programmed with his engrams, and the computer itself was full of hatred and anger and angst that it was never properly recognized, just like he felt. That's how he wasn't properly recognized as the genius he was. So the computer would take out its feelings on any spacecraft that came close, even if they were friendlies, and they had to figure out how to disconnect it, and they couldn't. Oh, what a great episode. What was that one called? You guys know that? Didn't know you were a nerd. Okay. All right. Let's see. High frequency is just front running. Yeah, I would say that. Let's see. Let's see. Somebody says, if you listen to Jason, I want to see what he said here. High frequency trading. If you listen to Jason, you're far ahead of everyone. He has a breakthrough here. Oh, thank you very much. I'd like to think so. What else we got here? 7-year-old. No, I don't know you were a nerd. Forbidden Planet was great about that concept. Forbidden Planet, yeah, that's one of the classics. Talks about how uh, poor thinking destructive, negative thinking, given access to unlimited power and opportunity, what would be the end result? And of course, that was the destruction of the entire planet. Ackman shorting Herbalife versus Icon. Best market story over. Ackman lost about $1 billion. Yeah, exactly. Dave John said, yeah, he's right. The ID subconscious. The id subconscious. Where is your id/ego when you get stopped out at the high print just before the market sells off 250 points and your short would have worked? How do you feel about that? Anyway, some great questions here, guys. Great comments. I really am enjoying this. I hope we get a chance to talk further, but I'm looking at the clock here and I know that everybody's got things they got to do. Anybody have any last minute questions? Something easy and simple, maybe, or something we can take a minute on, but I think we should probably wrap up. And Swiss says, thank you for your valuable time and wisdom. Great, no worries. Why don't you join my mailing list? Just go to info@netwinningtrader.com or go to netwinningtrader.com and send me a hi, hello, how are you? We got some stuff for you. And you'll know when I'm speaking again. Dave says, thanks, great stuff. Oscar says, great, thank you. David put in our website again for you. Let's see what we got here. Anything else? Any other comments or questions in here? What's this about trading is getting, what's this? Did I miss one here? FX Francis says, I find that one of the greatest challenges in trading is getting over the idea of being right or wrong. Yes, there is no right or wrong. Uh, well, yeah, I think what you're saying. Yeah, I know what you're saying. The results are the results. It's a probability play. And since we don't know what the probability on any one transaction is going to be, being right or wrong isn't the point. The only thing to do is to stay focused on the probability, take every probability, and let the probabilities play out. That's how you make money. And in the long run, you'll do better that way than any other way. You can, in fact, guys, I'm going to tell you, I'll leave you with this so you can get an idea. This is the final thing I want you to understand about what we do at Net Winning Trader and what other people do. One thing I want you to understand about probabilities. If you flipped a coin every day and went heads when it was long and tails when it was short, that is a viable system. All you have to do is make that consistent. So flip a coin every day at the same time. Use the same coin. Trade the same market. If you're always trade the same, you're always going to trade euro at 9 o'clock in the morning with the same quarter on your desk. You flip that consistency will drop down to the bottom line at about 49% winners, 51% losers, a couple of months here and there. You'll have it skew a little bit more one way than the other. All you have to do is make sure that the part of you that you play is that you never risk more than 1% on your equity on any one coin flip. And you are always trying to hold the winning trades, the ones that work. You're always trying to get at least 2% out of them. If you can do that, just calculate the math. You should be profitable every 90 days. I personally know one or two guys, that's what they do. They flip a coin, trade. I don't think that's the best way to do things because I personally can do better than 52% winning trades. So I don't need to flip a coin. I can actually use probabilities that are a little better, but I learned how to do that. If you really are just fed up with the whole thing at this point, you just want to see your account balance grow. Nothing wrong with a system of probabilities that is based completely on chance. There's nothing wrong with that because chance is a probability and it does have a degree of certainty and consistency to it that you can exploit if you know how to hold winners. So focus on holding winners and forget about what your entry is. Your entry takes care of itself. Just worry about learning to hold your winners. And that's really where the skill is, in my opinion. Zubra says, if you read Time Compression Trading, it's mind-blowing how you give a completely different way to think about trading. Well, thank you. I appreciate you saying that. Time Compression Trading really didn't attract an audience because It is, I think, a little ahead of its time. I'm not trying to say that not not trying to say that to blow my own horn, but I do think it was ahead of its time. You and Paula were the best to close the past 2 days, Annie Smith said. Thank you. Appreciate it. You taught me don't talk about your trading, so don't tell people your opinion. Okay. Okay. All good. Thanks, guys. I really appreciate the opportunity to speak with you. I know you've given me more time than normal. Thank you. Appreciate it, David. I appreciate you giving me extra time too. I'll go ahead and let everybody go. It's a late night, and please keep me on the list for next time. I would love to do a presentation again. I hope this particular one, um, on finding the hidden edge seems to have generated a lot more interest and communication and talk with people. So I'd love to do it again for you if you guys are interested. So let's keep that open door. Anything else we want to cover real quick?